The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday through Friday, noon until 1 p.m. Monday will be a half day, but I'll be here. Wow. Dow was up almost 300 points, went all the way to 23,254 from yesterday's slump. Now it's down 28 to 22,829. Now there are a couple of things going on. Most importantly, I wanted to put in a circle right here. So now what we've done, we took out the high, we took out the low of the rectangle formation. We can get rid of that. What's left now is the propeller shaft down move from the high of 26,951 in the Dow, October the 3rd. Comes down to 24,122 soon after that, about 3-4 weeks it takes. Rallies back up to 26,400s. And then what does it do? It comes back down. And this particular point, it looks like today, or maybe on Monday, it's going to test the low that was made of 22,644. I want to go through this very carefully because I've had to do a lot of thinking over the last couple of days, but especially for my show yesterday to today, where I said, we'll go through this in much greater detail today. There are a lot of questions, a lot of emails, a lot of longer term. People know what I'm talking about in the short term, that there is a very oversold condition. But what I was really nervous about is I thought there were two conditions that were really important. And the last condition was the government shutdown. And I thought that was kind of concluded by yesterday morning, which would allow for a rally. And then my thinking was we'd be looking to reshort a really strong rally because I'm anticipating at that point we hadn't broken 23,300. I was anticipating that 23,300 would be the downside target, getting close, have a sharp rally, and then the next move down, if 23,300 is taken out, 22,800 was next, with 22,200 following. Well, we did it all in one day yesterday. So the Dow was down at its low about 16% from the high. And if you recall, when we were talking about the top coming, I said top that should be something like between 8 and 14%. Could go more, but we don't know. And now we've gone more. And yesterday I was saying, I believe about 2/3. It's hard to tell because there's a lot of emotion attached to this. But in price, I think a chunk has been done. There could be a little more to go before we have a decent rally. But it's time that I would like. I'm not the arbiter of markets. I mean, I'm just a lonely technician here. But when I'm looking at this monthly chart with the cup formation, I have a rule of thumb. And the rule of thumb says that if you take out the cup handle and you go 1/3 below the previous high of, in this case, 26,616 to the low of 23,344, you go 1/3 low on a closing basis, there's a real good chance that you'll go 50% lower of that particular level to 23,300s to 26,900s, but it's really the 26,600s on the January high that I'm looking at. But if you go 50% and take that out, there's a really good chance you're going to go to the low. Well, the low is 23,344. We made that in April. And we've gone below it, but we haven't closed below it. My rule of thumb in this particular dreaded H pattern, the drop bucket pattern, double top pattern, is that if there is a close below the left side low, be careful because you could go 1-1 to the downside. And that would be a 3,000 point move from 23,000, taking you down to 20,000. Today I want to talk about the good and the bad. I always like to look at what if I'm wrong scenario. And the what if I'm wrong scenario says two things. Number one is that the monthly charts, now let me just quickly do this because as I do that, I can talk about the longer term picture. Look, keep your eye on the right side chart, that's monthly. Monthly Dow is down now 52%. And look at the MACD and look at the stochastic. Look at the analysis I gave a long time ago, about 3 or 4 weeks ago. I said the left side, right side has had two different technicals, and the right side is way weaker technically than the left side. That's why we were being very cautious. That's how I got the sell signal to sell mode. Now let's look at the S&P. The S&P right now, the cash. This is the options expirations. This is really important because the cash is down 12. Gee, just a few minutes ago it was down 2. It's down 12. But the E-mini, and we'll look at that in a moment, is down 30. Let me just quickly show you the E-mini. Here's the chart. We did a Chapman wave, single leg A up syndrome, failure. Most of the time it happens from 8:30 to 9:30 in the market, Eastern time, the opening of the news-related 1 hour before the market opens. Then the market spirals up and then fails and takes out the left side low. We've done that now. It was a peak A minus in the daily, but a peak E, sorry, in the 2-minute chart, a peak E in the 10. Now let's go back to our story. And our story says that there were two issues. One is that we wanted to be looking at right here. The Fed as one issue, and we want to be looking at, and this really is not market related, but they make it market related. That's the government shutdown. You know, no, I'm not getting into that. The government shutdown is really a very small percentage of the government, and everything kind of works out over a period of weeks. It's really unfortunate. It's always timed around about Christmas time. It's timed around Christmas time. Why? Because that's when you get the best results if you're bartering or bargaining or you have something that you're up against. All right. So what I'm looking at here is that the government shutdown is the next issue. But this is like talking about an internal low and a residual low. So gee, my mind is clear on what that is. How do I explain it in the short term? Let me just give you parameters. 2388 is the 200-period exponential moving average key support in the monthly, and I thought in the weekly chart, and I thought over a period of time, that's where we would go to after a big rebound, after the initial sell-off, and then we would take our time coming down, and then we'd have to have a whopper of a VIX spike to the upside, going to the 40s or 50s, just a really bad news event, and then we start a brand new buy signal, which should become a new buy signal to buy mode in the monthly charts over a period of the whole of 2019. That's the scenario. That's the good scenario. The QQQ right now is down, and this is related to those FANG stocks, which we've been very negative on for quite a while. 187.53 was the low, was the high, all-time high in the QQQ, the Invesco NDX 100 trading vehicle. And today, right now, we're at 149. Yesterday, we were down, I think it was 20%. Well, of course, today we're down more. We're about 21 to 22%. So the only way you can recover from this is to have a very strong rally over the coming 5 weeks that takes you decisively into the 155, 157 area and holds for a little period before we come back down. We've got the bell ring.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Everyone was bad news all the way around. I just got good news. I was a little worried. My son was flying overseas, coming back, and I just got a message from him. Just ran from plane across Charles de Gaulle Airport to connecting flight to New York, made it, and got upgraded to a comfy seat in business class. Oh, isn't that nice? You got to have good news once in a while. I like that. So we're looking at the QQQ down even more. It's down 2.73, down 1.8%. Dow's down 0.37. S&P's down 0.65. Wow, just took out the low. This is really not very good action at all. Straight down moves, need to have a V-shaped recovery, but so far it's just the leg down that we're looking at. IWM right now is down 1.76% at minus 233 at 129.51. So it was down 24% yesterday. Now it's about 25 and 26%, way under the 200-period moving average in the weekly chart. And the monthly chart, oh, I meant to mention this. The monthly chart here, this is the 4th month down since the August high of 173.39. Let me just go back to show you something quickly here. Look, the Qs, this is the 2nd month down, although it was a very ugly candle the month in October when it made the high of 187. The Dow, and this is to me, this is a bit of a worry because right here. The Dow is, if I can get it going, right there it is. This is only the 2nd month. And if you look at, what was I looking at yesterday? I was looking at something with Tom. Oh, but we'll get back to that. This is to me the most important index here, NYA.X. This is the New York Stock Exchange. It has taken out the left side low. It's gone from 13,635 to yesterday's low, just under 11,100, or right about 11,100. And the issue here is that it's got a flat stochastic at 4%. I do not like flat stochastics because if you remember, when it was a flat stochastic in the 96% range, I said, no technical book says at 96%, it's fantastic. It says it's very overbought. No book says at 5%, at 4.73%, that is it is potentially very good. What they say is horrible. I say that if it flattens out at that level instead of making a V-shape or inverted V-shape reversal, that's very negative because now it could stay in the single digits. So this is really important on the very big New York Stock Exchange. So we're talking about the downside. I first want to do the downside, then I'll talk about the upside. And let's go to gold. Gold right now is down a little bit. Yeah, it's down 7.5. Yeah. Gold is down 7.5. It made a leg E. And what I'd said is that the 200 period exponential moving average in the daily chart of 1258 should become very important support between there and, say, the 9-period moving average of 1254. Why? Because it finally broke above the 200-period moving average. Excuse me. It finally closed above the 200-period moving average. And now it's saying that you can wiggle around. You could do a sine wave or yo-yo action going above and below and above and below for a little while as gold tries to establish in the weekly chart some kind of a base that doesn't break down with this sharp move up in a stair-step fashion and then a sharp move down, and now it's had a sharp leg C right to the top of the up channel resistance in the weekly chart, still way under the 1304 200-period exponential moving average resistance. This is really important for the dollar, and I'll just quickly show silver. So the dollar is down 0.58, silver is down minus 1.10% at a potential peak D, and it never broke above the left side highs. Now I'll explain why this picture to me is establishing certain criteria that I now have been able to benchmark, and I'll show you. Look, the dollar having a very nice session today after a pretty lousy session yesterday. It's at 96.68, up 31 cents. If you look at the weekly chart, that 14-period moving average, you've only closed below it once. And that is all the way to the breakout April the 20th. Remember, we went long the dollar April the 6th. The low was 88.25 in February. And then it bounced, hit the 14-period moving average, and started to go sideways. We went long on that dip. And now what's going on is that from April the 20th in the weekly chart, not more than once has it closed underneath the 14-period moving average. And that moving average was the 21st of September. Yeah, so that's what, 4 or 5 months. And now what we've got is that there was a challenge to that intra-week. It went below it. Now it's nicely above it. It's sitting on the green line, the 9-period exponential moving average. This, to me, if you look at the monthly chart, this is the story for 2019. I'm trying to frame a really big picture, and it's one of the reasons why I think you saw just a little bit of strength in some of the financials yesterday. Looking at it, I'm looking at it globally now in a different way. I'm looking at it as currencies. I'm looking at it as having, let's just do the XLF right now, having survived thus far, not very well, but somehow surviving the move down without a crash at this particular point. It took out the weekly 2363 200-period exponential moving average. It's below it now, 2326. And what's really important about this is if the financials deteriorate significantly from now until the first week of January, that to me, together with the dollar, together with gold, together with, now look at the bonds, and this is a real potpourri. Today's the day I'm trying to amalgamate just a bunch of pieces of information to put it together as an outlook. The TLT is down 19 cents. It had hit yesterday, it hit 122. Did it hit that exactly? 122.03. Let me just type that in for leg G/C1, 122.03. Now, what is really important about this is that if the bonds continue to rally, and 122, as I said, this is really important because once you get to the 124 area in the TLT, then this is for those of you who've been in the market for not years but decades. You'll remember when yields started to deteriorate very often in the shorter term, not the longer term, but in the shorter term, very often it's money coming out, going out of equities, insecurity of equities, going into the more secure bond portfolio, the fixed income type thing. That to me is really important. So I'll put the pieces of the puzzle a little bit better together in a moment. I'm just wrapping it up. And crude oil, I had a question, and then do I think it's going to the teens? Not yet. I think yes. I know 27. It's at my.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Now, this is going to be very important. And here's the reason why I said to subscribers this morning, we are going to take a position for January in a call option. That's about it. And unless there is absolutely an all clear signal with some acknowledgement of passing whatever it is that's wanted by the Republicans, and that's out of the way, it has to be passed. It can't be discussions. It's got to be concluded. And my thinking was I didn't want to see the market close at the low of the day and then have really bad news, because from everything that I could see, the Democrats, and it's always fascinating to me, Democrats are like united as one, Republicans are always split, and then they have to be forced together, herded like you get your collie dogs around, you get them all together. Just a fascinating aspect. If there is nothing by Sunday night, and there's no volume whatsoever on Monday because it's a half day and everyone's taking off for the weekend, I went, and there's not all that much traffic unless you're on the turnpike. So I'm looking at this and I'm saying, I don't want to be around on the long side, which would be the wrong side, if on Monday there's almost like a crash type mentality because there's no one to support the market, and you've got really bad news perceived by the market, and the futures are down, almost lock limit down on Sunday night, and then on Wednesday when we come back, there could be, in fact, a some kind of a low of significance. But you know what? If there's a monster decline on Monday, a low of significance says any V-shaped recovery could take you back to where we are right now. Dow 22,690, S&P, what is the cash S&P 2436. So it's a process. I'm going to go to the VIX index in a moment. And that's the only reason why I wanted to look out, saying I'm seeing some kind of recovery. At worst, we'll lose maybe on the position for late third week of January. Maybe in the end, I'm sure we'll be able to get at least 2/3 of the price. And it's really more in kind of an insurance thing, not to miss a really nice, strong turn up beforehand. You never know when that's going to happen. And if it's the worst case, you lose 50% of your money, you know that in options, wow, there is always the chance of losing 50 to 75% of your money. That's the way it is. So it was based on a timing model, but the price model has to unfold correctly. Otherwise, it's not going to work at all. So if you look at this inverted Chapman wave stalk leg formation in the crude oil, you see this weekly move straight down like this. You see this daily move. I'm moving the chart a little bit to the side. You see this look at oh, too much. Go back. Yeah, there it is. Okay, stop, right there. Okay, you see all those candles just down, you can't even touch the 9-period moving average. Let me show you another chart. This is a chart formation I learned on the way up decades ago. I'm almost sure, I always say I think it's Merck, the pharmaceutical company. I'm pretty sure it's Merck. It did this on the way up, and there are some stocks that we saw. Apple, in a way, did this for a long time on the way up. Look at these candles on the way down. I don't have to tell you what it is because it's something that went from this level here of 581 to 2.03, but I will tell you what it is because it is NBR, Neighbors Industrial. Now, we used to follow this ages ago when this stock was screaming to the upside way back. I think it was 2007. Let me just check. Yeah, it actually started in 2000, and it just kept moving up and up and up, and eventually it hit 50. And, of course, now it's trading at 2. Hey, that's a problem. But these particular chart patterns, this little worm formation to the downside, we just saw on crude oil. And then the only way, there are 2 ways that you resolve this pattern. One is with an incredible V-shaped spike to the upside that takes out 8 to 15 bars on the left. And then it holds support. It doesn't make that single leg A up phenomenon. Did I just talk about that? Yes, I spoke about that in the S&P early this morning, the 2-minute chart. Instead, what it does, and Neighbors, thank you, Duffy. Yeah, Neighbors, the world's largest onshore oil and gas driller. And Peaky says, yeah, I'm seeing a lot of these worm formations. Yeah, these are persistence where there's not a cyclical, but it is more it's more a move that is a larger tide, a monthly tide. If you look at the monthly tide of crude oil, Neighbors in the oil service, but if you just look at the Neighbors chart, that the tide changed. And when that tide changes, it takes a tremendous amount to be able to recover. So now you can see I'm trying to get to the nitty-gritty of where I stand at this particular point, where we got the sell signal on October the 4th, on 3rd, confirmed on the 4th at the opening, and we actually went short, and we took a real nice profits on the way down, 25,000, and then had a tough time getting back into the short side. Now we're in the Dow much lower, but the sell signal to sell mode is generated pretty much, I don't know how it's going to change that, a sell signal to possibly a sell mode in the monthly charts. Now let me talk about what we're looking at. In the big picture, the speed with which this has all come about, when you look at monthly charts, there is a pattern in the October, if you go to the August high of 1987, the whole thing was done by October the 19th, 20th. So I've always said for crash type scenarios, there's a particular chart formation I look at. And the crash cycle chart formation, I don't see it in any of the monthly charts. There are some hints that I can see it in shorter term charts. So when I look at this, I'm saying to myself, okay, let's look at a worst case scenario. Let's just say there's just real bad news. And because of the bad news, somehow or other next week, sometime next week, somewhere between now and the first week of January, there is a low established merely on the vociferous selling. So that we've got the technicals and the shorter term are just washed out. There's stochastics in the single digits in the weekly chart. They're already in that in the daily. Goes to single digits in the weekly charts. And the monthly, all the technicals fail miserably. Then I think what we have is a really strong possibility of a very large arch formation. That takes us to different time frames. Remember, there's semiconductors back in 2002, I think it was, bottomed in October, but when the general market made it slow in March, they were already on their way up, the semiconductors, already on the way up. I think the same with the Qs. I'm not sure. I'll check it out, but it's not as important as the point that I'm going to make. And that is that there's a chance that we're about to get some culmination of selling pressure, which leads to a very strong rally. But the rally doesn't go to new highs. It's just a really strong rally, and then we do a bumpy bunch of retests going into...
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, folks, we're back. Dow's down 86, S&P is down 16, and we're going to go to a patiently waiting Ben from Tallahassee, Florida. Ben, how are you?
Good, Basil. How are you?
I'm sorry to keep you waiting. What is the question?
Yeah, not a problem. So, of course, I thought I was the smartest guy in the room over the summer months trying to average in on some of these dips in a longer-term account. And,
Okay.
you know, for these 401ks and IRAs where you can't day trade,
Yes.
you know, you just got to watch the bloodbath throughout the day, and then at the very end of the day, decide if you want to stay in the market or not. Would you, you know, I never thought I would consider this, but after the Fed made the announcement this morning, and then the market still continued to go lower, I'm actually contemplating on the next bounce to get out, or at least get out of half, or maybe even if there's no bounce today, get out of half. Any thoughts on that for the longer-term investment?
So this is what I'm thinking, because my thinking was when we were speaking that you were going to start at 25, although I'd say to you 23,300 really is the level that I'd be looking at. Now we've gone below that 23,300 level, and that would have been where we would be starting to look at in longer term accounts. Is this the area where you wanted to start at least putting money in? So you've got a situation now where you've been putting money in, but those levels have now been preceded to the downside. And the question is, what should I do right now? So this is what I'm thinking. Because we don't know what's going to happen on Monday or Tuesday, and I really think that the leverage of where the market is right now, with the way it's being tilted going into this weekend because of the market waiting for this news on the government shutdown. Technically, this government shutdown should have almost, I mean, pretty much zero effect on the market itself, but it is an overhang of a news event. So I don't want to get in the way of that. And my thinking here is that if there is a resolution, say Sunday night, at the last minute, or even Monday morning, and instead of being down 30 or something in the S&P futures, we are up 45 or 50. If you get out now, you risk the loss of a big move down, which could continue for quite a bit of next week, which means that you've at least got, now you can put money in at a lower point if you want. If there's a big move up, you've got out. But my suspicion, and this is really to answer your question, my suspicion is that even if there's a powerful, powerful move to the upside based on this weekly chart, what I call the Chapman propeller shaft, 1-to-1 to the downside, my thinking, and it's gone a little bit more than that, my thinking is that at some point, based on the FANG stocks still being early in their corrective process, and I don't mean, I'm not so much talking points, I'm just talking about time, because the majority of them have had a few years in which to just go up and up and up. They need time to digest, for people to now fear getting into them rather than looking at them as a buy. I think that you will have another opportunity to buy between 23,200 and 22,400, let's say. So if you are intending to, let's just say, to confuse everyone, instead of closing down 180 points, 280 points in the Dow to really make Monday's open absolutely a very important moment. There's a rally, and the rally takes you to a plus 100 in the Dow. The S&P cash comes back to a -5. That would mean that a lot of people are still buying the dips, even if it's institutions, because of options expiration. So I'm thinking that if you want to take a little money out because you feel that you're not sleeping well because you're pressured, because you're down maybe between 1,500 and maybe even 1,000 points, 2,000 points in the Dow from your entry points, then I don't feel that if I say to you, yeah, take a little bit off here, I would not get out of my positions. I would take something off. If you want to be able to just feel comfortable sleeping at night and say, you know what, if I have to put it back later,
I was going to say, maybe a better question is, do you see any very short-term technical reasons the market could pop any minute, and that could be related to maybe the trend gauge?
I was going to do the trend gauge. That was the next thing on my list. I did mention the trend, saying that I suspect that when the major low gets made, we're going to be up in the 50s or higher. Right now, it's at 27.59. It's down 2.78%. It has a little bit more rational view right now. It's saying, you know, a lot of damage has been done. I don't need to go much higher. I'm just saying to you that if there is this really negative close, and then we get a negative response on Sunday night because nothing's been done, that leaves Monday, it's a vortex. There's no volume. The futures, they can do anything they want. If they wanted to close it down 1,000 points, no problem. If they want to turn it and move it up 1,000 points, there's no volume. They can do anything they want. I'm saying sleeping well at night, looking after your capital that you've earned and you've worked so hard for. If you wanted to, because you feel you've just kind of over-leveraged a little bit more than you should on the long side, I say that this is I'm sure you will have an opportunity at 22,827 right now at some point over the next months to be able to put that back again. That's what I'm saying.
Thank you. That's great advice. And then I know you could certainly say no to this one, but do you have a short-term target for a low yet, or is it too crazy still?
Well, I do have a short-term low, but it's so in this market. Even when I give the futures every day for the for my E-mini, the parameters, I say +8. It turns out to be a +40. I say -8 is a -40. So I'm just saying to you, it's the 22,200 level on the Dow. To me, that's going to be pretty critical support. It's not a big deal. It's only 500 points away. But the fact is, that's going to be really important near-term support. If we can hold, and anytime we have a good bounce coming up next week, I think now I could say the bounce to the upside could be very sharp. But when you say very sharp and you've gone down in 3 days, 1,500 or more points. So what do you have to do? You have to be up about 2,500 in the Dow to really say, wow, that's a V-shaped recovery. Crazy. But you know what?
So I guess your point is, if we break through the 22,500 barrier, that's a whole different kettle of fish.
Yeah, in terms of price movement, absolutely. But I'm talking about in timing. Everything I'm looking at says between now and early next week, I'm looking for a potential for some kind of a low to be formed, established, and that's going to be important.
Got it. Okay, Basil, thank you very much.
Thank you very much for calling, Dan. I do appreciate it. Ben,
Happy
I do
holidays.
appreciate
Have a great
it.
holiday.
And have a wonderful holiday regardless. Thank you. I'll be back, folks. Dow's down 90. We'll be back right after these important messages. And we've got the TFNN sale going on.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So I just see there's a message here that Ruby said, McConnell aims to pass stopgap bill. A procedural vote is underway now to take up the bill. If it passes and the bill passes, it could spark a bullish reversal in the risk rate. This is what I want you to say to Ben. The market only wants to have this next aspect out of the way. And if it does get it out of the way, on a time basis, everything I'm looking at here says we are within a day or two, we should be, of a very sharp reversal. I also said that on October the 16th, it was, of 1987. I said my timing model says Monday should be the low. I never expected a 508-point decline, but that was the low. And all I can say is that everything I'm looking at is suggesting that we are really, really in a situation where it's either crash and don't recover. I really don't want to say crash because it's the mentality that I want to avoid here. But there are enough. Most of the most of the stocks that I'm looking at, the key stocks, are in a short term. The daily and the weekly charts are in a short term area where this is where they should bounce. My stochastics at 6% in the Dow, and same with the S&P, very low single digits. MACD is not good, but it's at a point where it could start to reverse. This is exactly it. But I'm saying you don't have to put your money on the line. You could use either options, or you could say, you know what, I'll wait for a reversal. And I say to my subscribers, if things get past, that's the only time we want to go in, and there are certain levels in the industries that we're looking at that's where we want to be buying. I don't want to be left holding the baby, being long right now, and then being wrong over the weekend, because the risk to the downside it's unnecessary, because you're giving up. Yeah, we might have to give up, because if on Monday and Tuesday, Monday and Wednesday, things are spiraling to the upside, you have to buy the gap up. I don't like doing that, but maybe so. Anyway, for those of you who are not going to be here on Monday, well, we'll be here. Have a wonderful Christmas. Have a wonderful New Year's. Have a wonderful holiday, regardless. Remember your health and your family, friends. That's the most important thing. Have a wonderful, check out my opening call, my newsletter, and don't forget the Tiger sale that's going on right now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.